Today's number, the number 10, right? 10 is today's number because we only have 10 days left before tax season is officially over. All right, so tax season ends on April 18th. April 18th, not normally, or not April 15th, right? And actually, we haven't had an April 15th tax filing date in like the last 3 years. But this year, tax filing deadline is April 10th. So we only have 10 days left to get our taxes together and get them filed on time. So in today's video, I'm going to talk about what you need to do. I got 7 tax tips that you need to follow for late filing to get everything through so you could at least minimize having any problems with your tax return. All right. So listen, everybody, I'm Kamari Ellis. This is the Daily Number Show. This is the segment of the Finance Rebel Show that I come to you and I talk to you about daily news and what's going on in these markets every day. The whole channel, the whole show is about money, taxes, stock, business, economics. If any of those things are on the table, we talk about them. All right. By day, I'm a tax accountant. I'm actually an enrolled agent, so I'm federally licensed to handle people's tax problems. I do that all day long. And by night, I hang out with you folks, come here and talk to you about some money with the hopes of helping you understand finance, money, investments a little bit more so we can move higher together as individuals and as a community. All right. So let's hop right into it. Y'all know every show, we always start our show with the stock market rundown. We get into our topic. Again, our topic today is last minute tax tips. And we end the show usually with our affirmation of the day. And then today, we'll probably do a little after show talk, which that, will only be for us folks who are here live. That won't be for the folks who come on the replay. Now, if you are watching on the replay, do me a favor, just chime in and say #replay. Let me know you're here. Let me know you're present. So, I can keep account of what's going on and what you all want to see. So let's jump right into it today, y'all. Let's jump right into it today. So as always, we go through our stock market rundown, right? And today it's kind of an interesting day, right? Market's crazy as usual. Now I started on the wrong screen, but let me get to the right screen here. Started off with Bitcoin, but let's start with the stock market, right? The S&P 500, which is the 500 largest companies, and the 500 publicly largest, wow, tongue-tied already. The 500 largest traded companies in the United States. That's what the S&P 500 represents. We use that as our benchmark to track the stock market here on the show. And today the stock market closed at 4488, 4,488. Stock market down a little bit for the week, right? Down 1.27%, percent in the quarter-ish, right? So again, markets are still going to be fluctuating up and down. Everything's still happening with Russia and Ukraine. Some bomb strikes happened, so there's still some stuff going on, putting more pressure on the stock market than usually is under regular times, right? Okay. Crude oil, still below the $100 mark, but it inched up a little bit higher today, right? $97.90. Crude oil closed at $97.90 per barrel. Okay. So crude inched up a little bit today. Week to date, it is down, right? It's going in the right direction. 1.5%. It is down 1.5%. So that's a good thing. That's a good thing. I'm not going to complain too much about that. Again, we will check in next week and see how gas prices are starting to react and this fall in overall oil prices. So we'll see how it works out. All right. Gold inched up a little bit, right? Yesterday was in the 40s, the 30s. So today gold closed at $1,950 per troy ounce for the cost of gold. So gold went up a little bit. Over the last week, it went up about 1.1%. Let's just say a percent. Let's just round it off. Gold's up about 1% for the last week. So again, things are coming in pretty kind of to be expected, right? It's kind of milquetoast. It's kind of steady as it goes. Now, Bitcoin is up 42,247. That is down. And Bitcoin's down. Let's see how much Bitcoin is down. Bitcoin is down 8.5%. 8.5% this week. So again, still have a positive correlation to the markets, but it's multiplied like by about 3 or 4 times what the overall market's doing this week. So just be careful about what you're doing and keep an eye on that as we go into this new spring season, as we get ready to get going. All right. So today we're going to talk about taxes 10 days before the tax deadline. Tax deadline is April 18th. Thank God. Thank God this has been a tax season that we could all need, or I personally need a vacation from. I personally need a vacation from tax season. I personally need a vacation from taxes in general. So I will be okay with tax season being open. I think I'm going to go on vacation. So if any of you all have any ideas on where I should go for a little short vacation, put it in the chat. Let me know what you think. Also, if you're making comments in the chat, there's a couple of people I can't see because you didn't give StreamYard permission to share your name. I believe you're over on YouTube. But good evening to everybody. Good evening, good evening, good evening. As always, make sure you chime in. Let me know who you are. Let me know where you're hailing from. And if you have any questions, go ahead and throw them in the chat. Just put a Q in front of them, and we will save them for the after show. We will save them for the after show. But again, today we are going to talk about taxes. We are going to talk about taxes because it's a necessary evil. I know a lot of y'all don't like taxes. I can tell by the comments that you leave on my YouTube channel. By the way, if you're not following my YouTube channel, just go to YouTube and type in The Finance Rebel. The Finance Rebel. I would appreciate it. Subscribe if you get value from this channel. But I know a lot of y'all don't like taxes. I know a lot of y'all feel taxes are illegal. I know a lot of y'all feel like it's thievery. All right. But I can't help any of you with that because taxes are legal. They've been legal for quite some time. And Congress is the one that controls that. So I don't look good in federally issued orange covered jumpsuits. So I'm just going to give you what the law is. So I am just the messenger here, folks. Please don't get upset and mad at me for just delivering the information here. That's it. I'm just delivering the information here. That's it. All right, but let's jump into 7 tax tips for late filers. All right. So number 1, file an accurate return. Please file an accurate return. If you do not file an accurate return, your tax return could be delayed. And nobody wants a delayed tax return, right? The IRS is still backed up. The IRS still has plenty of people that have not had their tax returns processed yet for many a reason. Right. Sometimes there are errors in the tax return, so they get thrown into what's called the errors department, and they need to be corrected. And sadly, the IRS are correcting a lot of these tax returns by hand. I don't know why. As Aaron Collins said, paper is the IRS's kryptonite. So that's a sad thing. It's not good. There is some hope though, right? Because the IRS is fast tracking their hiring process. Again, the IRS got hammered by COVID. A lot of times they weren't able to get through a lot of returns because people were out with COVID. They lack manpower. And the IRS's technology sucks, right? I don't have any other way to put it. It's not good. It's not great. It's not been updated since the 60s and 70s. Well, more like the 70s. So it's not good. But again, first thing, make sure you file an accurate return. Many times, again, if you make an error on your return, it will not be processed. It will wind up in the error department, and then you will have to call them in. For all of you that got advanced child care tax payments, please make sure you go to the IRS's online account. Go to that portal and get the number. Make sure you have it when you're filing on your own, or give it to your paid tax preparer. Okay. Because again, if you don't have that, it could cause an error. Or if it's reported improperly, it could cause an error. And nobody wants an error because it slows up everything. Okay. Also, if somebody else files for you, your Social Security, or the children that you're claiming on your tax return, it could also create a backlog, right? Sometimes this happens with identity theft. Sadly, again, it's something that you do not want to have happen to you. Again, it slows up a lot of things. I have clients personally from as back far as 2019 who have returns that are backed up because somebody else filed their returns. I know last year I have somebody with ID theft, still backed up, no notice, no notification, no nothing. So again, make sure to try to report an accurate return. And don't dream up any numbers. Make sure that you can back them up just in case you are audited by the IRS. Okay. All right. Number two, consider contributing to an IRA, individual retirement account. Consider it. You can still contribute to an IRA up until April 18th, right? The actual law says up till April 18th or when an extension is filed, but which means that you can contribute up to a point, let's say until October. Sadly, it gets a little squirrely on the institutional side when you try to do that. So I encourage everybody to contribute by April 18th. Now, how much can you contribute? $6,000. Now, sometimes you can get a tax benefit from it, sometimes you can't. Now, if you work a job that you have a pension plan or 401k plan, 9 times out of 10, you are not allowed to get a tax break. But there are many people who do not have a 401k or a pension plan at their job, and they can take advantage of putting money into an IRA. So you can put $6,000 into your IRA. And guess what? If you are 50 or more, 50 plus, you can put an extra $1,000 into this IRA for a grand total of $7,000. And it will be classified for tax year 2021. And the $7,000, and that will give you a tax benefit. So you'll be able to write off that $6,000 or $7,000, depending upon your age, on your taxes. Again, if you meet certain criteria. So, you get 2 benefits, right? You get the one benefit of getting a tax deduction, possibly. 2, you start building up a nest egg. Both of those things are very, very, very important. All right. Now, this is one thing that has gotten a lot of people confused over the years because some of the tax laws have changed, right? Consider doing itemized deductions. Now, what is itemized deductions? Some of you are probably asking, right? So, itemized deductions are when you exceed the standard deduction. You're probably like, Kabari, what are you talking about? Now, the government gives everybody a standard deduction, a certain threshold that you will get to write off on your taxes automatically. And anything over that is extra. So I'm going to come back to the itemized deductions. I will give you those levels in a minute, but I want you to understand what are all of the deductions that you can write off when we're looking to itemize your deduction. So if you go to church or any kind of charitable givings, you can write that off from an official 501c3. Just giving money to somebody who is in quote unquote need does not constitute charitable givings. Just wanted to let y'all know, FYI. Okay. Other things that will be considered in the whole itemized deductions calculation will be, again, charitable contributions, mortgage interest, real estate tax, health expenses, co-pays. I just got some new glasses. Matter of fact, let me take these off. Just got glasses costs, dental costs, things like that. All of those things could possibly help increase your itemized deductions so you can clear the threshold and write them off. Some of those things really add up. The other thing that you can add to that is real estate tax, but also state and city taxes as well. If you work in a big city where they take wage tax, like I do in Philadelphia. All right. And so what's a standard deduction? Now, it gets a little complicated here because for each filing status, right, there's 4 filing statuses, but for each filing status, you have a different standard deduction. And so when you get more itemized deductions than the standard deduction, you can itemize deductions, if that makes sense to you. Okay, so I had to write this down. So there's a standard deduction for single, head of household, married filing jointly, and married filing separately. Okay, so the standard deduction is for single. If you're single, no children, it's just you, it's $12,550. So you get to write off $12,550 on your taxes immediately off the rip. Okay. For head of household, that means you have a dependent, either a child, sometimes a parent, sometimes a sibling. You then get a standard deduction of $18,800. Then if you are married and you have a spouse and you file together, right? You filed your income together on your tax returns, you get $25,100 off as a standard deduction. That's the big mama of all the deductions, right? Now, what if you are married? And I get this question a lot, but what if you're married and you don't want to file taxes with your spouse? You can do what's called married filing separately. Okay. And then you get the same standard deduction as single, but there's a caveat. But that deduction again is $12,550. Now, when you're married filing separately, you get a whole lot of other extra penalties because the government wants you to work together, pull your money together, and file jointly with your spouse. And so they penalize you. They don't let you contribute as much money to your IRAs. Sometimes if you have rental losses, it gets a little funky with what's going on if you're married filing separately, especially if you live in a different household. Again, that's really, really weird. Check in with your tax advisor on that because that can get a little funky. That can get a little convoluted. All right. So again, going back to this, let's say you're married, right? You're filing jointly. You and your spouse work together, right? So you go to church, or you go to the synagogue, or you go to the mosque, or you contribute to a charitable contribution. You have real estate taxes, you own your home. You have mortgage interest because you own your home, right? You see that double whammy there, how the government wants you to be a participant in real estate in this country. Also, you both work at jobs that pay a wage tax to your local city or township. So then you also pay city and state taxes as well. All of those items have to exceed, right? Have to surpass, have to be more than $25,100. Okay. Now, if you're not married and you're just single, it's just you don't have to worry about anybody else. All you have to do is have your standard deduction exceed $12,550, right? So again, go to church or give out money to charitable contributions. By the way, it can be church, civic, educational. Most of those things are charitable. Again, it has to be a 501c3 or some other nonprofit designation. It can't just be some individual that is in need. All right. But you do all those things. Again, you have charitable contributions, real estate tax, mortgage interest, things like that. All you have to do is exceed $12,550. So it's a little bit easier to surpass that. So again, every dollar over that threshold counts. Every dollar over that threshold counts. And I see a lot of people miss out on that money because they never take the time to say, hey, on my paycheck, I give to the United Way or to the Red Cross, and they forget to add those in to their itemized deduction. Say, hey, I go to church and I tithe 10%. That begins to add up. And they say, hey, we pay real estate taxes too. Those things begin to add up. So again, just double check. See if you are getting what you're entitled to, right? See if you are getting what the law provides for you. All right. All right. So next one is look for Vita. You're probably like, what is Vita? So Vita is volunteer income tax assistance. Vita is volunteer income tax assistance. That is a program that's put on by the IRS, by the Internal Revenue Service. And it's for people who are low income, who are disabled and who don't speak English that well, right? And so to be considered to be in this program, you need to make less than $58,000. So I know some of you that are watching the show might make less than $58,000, might not make sense to go to a paid preparer like myself. But guess what? There's still help out there for you if you need help to file your taxes, to file them right. Vita is a very, very good program. I actually did Vita, I think it was for a year, maybe 2 years here in Philly, because my buddy kind of helps run the program. And they train those folks pretty well. By the way, side note, if you are interested in becoming a tax pro, because I do get messages occasionally about people who are looking to become tax pros, I would say start with the Vita program. You can get some on-the-job experience. Again, it's not paid. Sometimes it can be paid, but just look into Vita and see if you could volunteer for them, and then you could begin to learn the trade, right? It is a trade. But again, look for Vita. That's one of the things you can do, and they will definitely help you out, especially if you are in a jam and you've waited until the last minute, all right? This is one that always gets me, right? Please be organized. Don't come see your tax person and give them a million pieces of loose leaf receipts. It's not fair to us. It's not fair at all. And then you don't understand why we want to charge more, because going through each pieces of paper actually takes time. But when I say be organized, make sure you have all your tax forms that you need, your W-2s. If you are a gig worker, working in the gig economy, doing Uber, Instacart, what are some others, Lyft, things like that. Make sure you have your 1099s. Hopefully with that side gig, you're also tracking your business expenses. There's a video on my channel that talks about business expenses pretty thoroughly. You can go check that out as well. I have to find that somewhere. But just make sure you have all of your documentations. The better organized you are, the more you can get tax deductions, right, up front, and the better you'll be able to defend yourself if by God's chance you are ever audited by the IRS, because it is not fun by any stretch of the imagination. So actually, a lot of people don't realize this, but we talk about doing all the fun things, all the sexy investments, but organization is actually a cheat code. It's actually a cheat code to wealth. Organization is a cheat code to wealth. I said it. I haven't heard anybody say that. But if you are organized, it'll help you figure out things faster, and it'll help for you to be able to figure out which way to go next. So be organized, y'all. By the way, I struggle with organization. There's some things I kind of have, right? Just being true and honest and transparent. There's some things I have, but man, there's some things I struggle with. So again, work on that, y'all. Work on that. All right, next thing, electronically file your return. I've had a couple of people this week say they wanted to mail their returns in because they're old school. And I said, are you crazy? The IRS is backed up. Last year, the IRS had over 30 million pieces of mail backed up, unopened. Now, they say they don't have them now. I still wonder, but we know that the IRS is trying to hire a whole bunch of people to answer the phones and do some of the other manual processing. I wouldn't want to gamble on going in the mail to the IRS, not just the IRS. Then you have to factor in the post office. You know, good old snail mail. This is never a good idea, in my opinion, especially if you have the option or the opportunity to file electronically. There are some times when you can't file electronically. There are some times when you cannot file electronically. One is if you have ID theft. The other is, because I'm dealing with this with a couple of my clients, the other is if you have a first-time home buyer's credit and it hasn't been dealt with properly. So then you have to mail those returns in for them to be calculated manually. And boy, oh boy, is it a pain in the tush. It is a pain in the tush. So again, like I said, please do all those things, right? Especially when it comes to filing your tax returns. Make sure make sure you do each one of those things, right? You want to file accurate figures, right? If possible, you want to look at contributing to an IRA. If you qualify, you want to make sure you can itemize your deductions if you are open or not open. If you qualify, that's the word I'm looking for. If you qualify for that, right? If you don't qualify for this and you need some help, make sure you look for Vita, right? Voluntary income tax assistance, okay? Be organized. Organized is the cheat code to wealth. Being organized is the cheat code to wealth. Please, please, please electronically file your returns, please. It doesn't make sense to be old school on some things. There's some traditions that make sense to keep. Every now and again, we have to go back and reevaluate the traditions if they still serve us, right? You have to look at it. It doesn't serve to do mail much anymore. Now, I will say this. It might be a good idea to drop a love letter to your spouse or your loved one every now and again just to do something different, spice things up, but there's no need in sending love letters to the IRS. All right? All right. And then also, lastly, I forgot this one. If you cannot file your taxes by April 18th, file an extension. If you're not organized, if you're not ready to go, if you don't know where anything is, file an extension. Now, if you just so happen to be a business owner or someone who makes a lot of money and you might owe taxes, try to send an estimated payment or a payment in with your extension. Try to send a payment in with your extension if you believe you are going to owe. Also remember, filing an extension is an extension to file your tax return. It is not an extension to pay your tax bill. Now, you usually get about 60 days to pay your tax bill from the time it's filed, where it's not gathering any interest. However, there are some instances where they're like, we know you owe. We know they're going to play this game. So you're going to get a penalty for not filing and not paying. So again, the IRS loves to take folks' money. Don't give them any reason, because at the end of the day, right, remember this, the IRS is a group of people that work together, that want to follow the laws. They want to go to work. They want to get home to their families, and that's it. Usually, there are some exceptions though. Usually they're not out to screw anybody or do bad will or harbor any ill will to anyone. So again, make sure if you ever have to call them, be nice, be courteous, because those are people that can jack your stuff up. Okay. So again, keep all of those things in mind. Also, lastly, this is not any advice, legal or tax. All right. This show is for entertainment and tax. This is for entertainment and educational purposes only. I am not giving you advice, just some suggestions. All right. So the affirmation of today, ladies and gentlemen, the affirmation of today is embrace change and welcome new opportunities. Embrace change and welcome new opportunities. Embrace change and welcome new opportunities, right? How are we going to be ready to get to the bag if we don't want to embrace change? How are we going to be ready to get to the bag if we don't embrace new opportunities? You be really interested to wonder why folks are so stuck. Well, I'm always interested in wondering why folks are so stuck, right? There's over 10 million unfulfilled jobs out there. And a lot of times they're not fulfilled because people don't have new skills. And why don't people have new skills? It's because they didn't embrace change. They didn't welcome new opportunities. So they stay stuck and they stay stagnant. And then they get mad at everybody else. They get mad at everybody else for not, quote unquote, looking out for them or for not giving them an opportunity. Where oftentimes we are the ones who have to create our own opportunities for yourself, right? My old mentor used to have this saying, show up ready to play, show up dressed to win. It's one of them. Show up ready to play, and show up dressed to win. Something like that, right? But basically, it's what I just said, right? He was embracing change and he was welcoming new opportunities. And he was saying, oh, I know what it was. Be ready, show up, be ready. I need to go look it up. I wrote it down a long time ago. But again, it's still saying you got to show up, right? Showing up shows that you're putting up an effort. You're putting out an effort to even be in the game, to even do something with a positive impact, right? Show up dressed to win. Now, my mentor was a big suit and tie guy. I hate suit and ties. I personally don't hate them. And you always say, come on, why ain't got on a suit and tie? Now, I would wear one when I needed to, but I was never one. I hated ties. I have a whole story about when I was younger and why I don't like ties. I'll tell you that one other time. But he would always say, come on, why don't you wear ties? I was never comfortable with ties. And I always felt that I could still communicate and still get the best value for my clients, whether I have on a tee or a hoodie or whatever. So I just never really adhere to that traditionalism as it comes to dress. But there are certain instances where I do have to show up ready to play the game. If I'm going to meet a banker or a potential client or certain things, I might wear a suit. Might not wear a tie, but I might wear a suit. So again, I'm showing up ready. And then I'm coming there with the mindset ready to win. I'm open to change, right? I'm embracing change and I am open to new opportunities. All right. So again, we covered the stock market today, covered some last minute tax tips. Of course, we covered the affirmation of the day. All right. I'm always so humbled that you all are here with me every day doing the daily number. And I would ask you all, if you like this show, share it, right? Like it, leave a comment, and just be a good participant with me and continue to show up every day. All right, y'all. Continue to be great. I'll be back on Monday, 8 p.m. Make sure y'all get y'all taxes. Until the next time.